Well, I think the next big catalyst, of course, is twofold, but both involve trade. Trying to get, of course, Congress to take up and maybe pass some of the deals we already have with respect to Mexico and Canada. But, of course, maybe sewing up all the loose, frayed edges of what looks to be, at least if you take Secretary Mnuchin at face value, a China deal that's getting closer and closer. And to be clear, you're absolutely right, but let's also point to the notion that the questionable deleveraging that occurred in October and November certainly ended abruptly in the first quarter, had a lot of horsepower, considering that throughout that entire period there's probably some deterioration in the domestic and global economies.
Eugene, what do you think of stocks right here after the double-digit rally we've seen since the start of the year?
Well, I think that we are set up to take a pause here. I do think that basically there's been a lot of news that's come out, slowing growth rates. You have the trade issues that Rick just mentioned. You have corporate debt expanding as well as government debt expanding. And I think that although profits in corporations have looked strong, with the headwinds that are out there, we're starting to look for companies and sectors that are a little less conservative, expecting a little bit of a pullback here. Not anything extensively, but with all the geopolitical risk out, we think that the risks are more to the downside than positive to the upside currently.
Rick Santelli, should we be talking more about corporate debt and also government debt for that matter? I know two things you have been talking about, and the fact that those levels just seem to keep ballooning. Quite a number of officials have highlighted that on our air even just in the last couple of days.
Well, I think the remarkable thing about looking up at interest rates, looking at the security spreads with respect to investment grade high yield against treasuries and monitoring all those relationships, it would be very difficult to tell lately that we have so much debt to service and that we have growing amounts at auctions, and we're not the only country doing that. And, of course, in the macro picture over the next several years, corporations have to lock and load their maturing debt. So it's definitely a question. But it also shows quite clearly how illogical markets can be. Here we sit at under 2.5%, well below the 3.25% that topped us out in the last quarter of last year, all at a time where everything you asked really is getting significantly larger. So there's only two things we could take for that, and that is the relative interest rate pressures that the U.S. is feeling globally, and, of course, there's quite a pool of investors and institutions and pension funds and insurance companies that seem to have constant demand on the buy side, keeping rates capped a bit in the U.S. But you can't fall in love with that relationship, and it can change ever so quickly.